Over the past several years, around 6 or 7 years to be exact, I've been building out a long-term dividend growth / income focused portfolio that's made up of several different positions, stocks, and ETFs that all more or less pay me dividends on a monthly or quarterly basis, but on top of that have the potential to grow in price over time. Now, one of the main goals, one of the main things I'm personally solving for as a dividend growth / income focused investor is that I've been wanting to get my dividend income to a point where on average every single month I'm able to take care of and pay most of my fixed expenses with dividend income if I so want to. And even though as of right now I'm currently not doing that, I'm currently reinvesting my around $6,500 on average every single month back into more dividend paying stocks and ETFs. But sometime in the future, maybe 1 year, maybe 2 years, maybe 5 years from now, I will in fact be using, if not some, maybe a majority of my dividend income every single month to do things like pay bills, travel, etc. Now in this video specifically, I'm going to be talking about 4 high yielding dividend paying ETFs that I've been buying for quite some time now and that I'm planning on using to cover my bills on a monthly basis when of course that day comes. Every single one of these ETFs pays a nice juicy starting yield, and also every single one of these ETFs have the potential for capital appreciation on top of that. So if you're a dividend focused investor looking to use some of your income in the future to help cover some fixed expenses or to pay for all your bills, make sure to stick around, drop a like down below, and let's get right into the first ETF. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first higher yielding dividend ETF that I've been buying for several years now, stacking well over 1,000 shares of throughout my portfolios, is Devo, or the Amplify CWP Enhanced Dividend Income ETF. Now, right here on the Amplify ETF website, in case you're not familiar with Devo, it says why invest in Devo: income potential, which is exactly what we're looking for, comprised of high quality dividend oriented stocks along with cover calls on individual stocks. Now, I personally have been buying shares of Devo for around 3 or so years now, and what I love about Devo is that it has a relatively cheap expense ratio. Devo has grown in price nicely over time as far as price return goes, but also most importantly, especially for what we're talking about for this video, is specifically saying that we're trying to look for high quality, super high quality dividend paying ETFs that offer income on a monthly basis. Devo offers a dividend paid monthly with a distribution rate of around 4.81%. So although it isn't the highest yield across the entire market, Devo also does have some potential for upside, which is great. And with a starting yield of around 5%, I don't think anyone's really complaining. If you're looking for a monthly paying dividend focused ETF that also most definitely has the potential for some upside, definitely check out Devo, the Amplified Enhanced Dividend Income ETF. The next safe, high yielding, dividend focused ETF that I've been buying like crazy over the past few months, and that's definitely going to help me in the future when it comes to paying bills with my dividend income, I'm talking about SPYI, or the NEOS S&P 500 High Income ETF. Now, it's not just me that's been talking about SPYI over the past, say, 6 or so months. Dividend and income focused investors across the entire market have been very interested in this ETF because of its massive 12% more or less starting yield, but also what this ETF has to offer in its strategy. It says targeted benefits of SPYI's strategy. Number 1, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. Now, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as 1, 2, 5, 6 contracts, which are subject to lower tax rates. Now, lastly, most importantly maybe, the fund utilizes a call option strategy, which may mean that this fund is going to buy and sell SPX index options. Now, why that's important, what that means for this ETF is that even though it does have the cover call overlay, which is going to generate a ton of premium and therefore distributable income for investors, by potentially purchasing SPX index options, this ETF also has the potential to grow in price. So specifically for an investor like me that's looking to generate a ton of income on a monthly basis, again, because I personally am looking to use, if not some, all of my dividend income in the future for bills, this ETF will do that, but on top of it, it's going to do it in a tax efficient manner because of this right here, and also has the potential for upside. There's tons of good ETFs across the market for income generation, but one of my favorites as of right now is definitely SPYI. And speaking of income generation, another super easy way to generate a ton of monthly income to use for your bills in the future, or for now, of course, is to invest into something like SVOL, the Simplified Volatility Premium ETF. Now, this ETF is a bit more confusing, But let's dig into it and see exactly how this ETF works and how it generates so much dividend income for investors. So it says the Simplify Volatility Premium ETF SVOL seeks to provide investment results before fees and expenses that correspond to approximately 1/5 and 3/10 the inverse of the performance of the CBOE Volatility Index or the VIX short-term futures index, while also seeking to mitigate extreme volatility. On top of that, the fund shorts VIX positions to provide investors an optimized exposure for monetizing the premium earned in the VIX future markets. A modest option overlay budget is also deployed on call options in case things turn for the worse in reverse, which means this fund basically has all bases covered unless of course something insane happens. Now, some of the key points, these are also very important aspects to consider. The first, ETF providing inverse VIX exposure, and this is also coupled with that dynamic hedge, and this is just of course in case things go crazy. 25% short VIX exposure helps to balance trade-off between high income and volatility drag, and deep out of the money VIX call options seek to provide low cost protection against extreme VIX spikes. Along with that, monthly distributions, which are awesome. Now, some more important facts about SVOL. The expense ratio is pretty high at 1.16%, so this is something that investors are going to have to consider when investing into SVOL. Now, for this video, I promised high quality and ETFs that can generate a ton of income on a monthly basis and have historically, but on top of that have the potential to grow in price over time, so I couldn't leave out one of my favorites, maybe one of the most popular and highest quality income-focused ETFs. We're talking about JPQ, the JPMorgan NASDAQ Equity Premium Income ETF. Digging a little bit deeper into JPQ and sharing why I'm so fond of this ETF and exactly how it works, JPQ, it says seeking consistent premium income with lower volatility. The JPMorgan NASDAQ Equity Premium Income ETF seeks to deliver monthly distributable income and NASDAQ 100 exposure with less volatility. It then says expertise lead portfolio manager Hamilton R has over 3 decades of experience investing in equities and equity derivatives. The portfolio, underlying equity portfolio, employs an applied data science approach to fundamental research and portfolio construction, and then along with that, disciplined option overlays, implements written out of the money NASDAQ 100 index call options to seek to generate distributable monthly income. So all in all, like I sort of said, JPQ is more or less a typical cover call style ETF. It buys a basket of equities and sells cover calls, in this case written out of the money NASDAQ 100 call options. Now, the reason I'm personally a big fan of the cover call strategy is because I like cash flow and because I do not like volatility. There's certain investors out there that would rather deal with volatility for some more upside, but for me, I'd rather have a little bit more capped upside if it means I'm going to have less volatility and more cash flow, but that's just me. Now, one of the reasons I'm a huge fan of JPQ is of course because of the underlying holdings. I've talked about this before in previous videos, but a lot of the cover call style ETFs just aren't exposed to the right holdings, and depending on the cover call overlay strategy, some of these cover call style ETFs don't have any upside more or less, and really only have downside. But because of JPQ's strategy and because of the underlying holdings, this ETF not only has paid investors like myself a consistent 7, 8, 9, 10% yield per year, but also has grown in price significantly. So there we have it. Those are 4 of my favorite higher yielding ETFs across the entire market in the context of finding different high quality ETFs to potentially use to pay your bills on a monthly basis. Like I said, either now or maybe later on like I'm doing in the future. But out of every single ETF we talked about in this video, I want to now hear from you guys down below. Which is your #1 favorite across the entire basket? Drop the ticker symbol down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.